Hello everyone, welcome to the channel again. André Cardoso here, as always, thank you for being here. For today with a special video for the Japanese yen, covering some of the pairs that I used to follow on a daily basis. So the euro yen, dollar versus the yen, the pound, the Aussie, the New Zealand and the Canadian. I think we are in a situation where we may say the market is calling for our shorts. But there is also a level of prudence or caution that we need to have, of course. That being said, let's start with the euro versus the yen. I think we are inside of what we may call a wedge pattern, or also call it the megaphone pattern formation. As you can see, I started to project this pattern after a bounce, after seeing this bounce from these lows. And then, of course, once the price prints this daily fractal resistance, allows me to identify this trend line at the top, at the highs. So as we can see, we are threatening not only the recent, so we have a recent resistance printed at 143.43, so we still threatening these highs and this fractal, but most important, we still trading above the previous resistance, the previous daily fractal at 142.81. There was a shark pattern projected at 168 extension, as you can see, the blue Fibonacci level right there. There was an initial reaction, as we can see here, once the price approaches the golden fib, but not enough. As you can see, the market, the price finds support immediately at the previous resistance, and then it rallies to new higher highs. And at this point, I have another pattern that may start to emerge if the price keeps trading higher. And that points to 143.96. That is the 224% Fibonacci extension, and I admit a false breakout above this wedge. So I admit the eventual move above this daily fractal resistance, eventually a few points above the 224% Fibonacci extension, but I want to see a reaction to the downside after completing this sequence for the euro versus the yen. Let's see if the market will be capable to do that. Then for the dollar versus the yen, it's very similar. We have also the 224% Fibonacci extension right above the previous or the recent highs, so which means we just need a new higher high, kind of a false breakout above the recent highs, in order to complete this sequence. Let me draw that for you. So we are talking about the potential shark pattern projected at 224% Fibonacci extension level, which points to 134.50. So that pattern formation will suggest a 50% retracement after completion. So we will target the 50% Fibonacci level after the formation of that pattern. It's a huge drop. That's equivalent to 1.74, 1.75% below the completion point, 235 pips below the entry point, which is interesting setup for sure. Then you have the pound versus the yen, and this one I projected a bearish crab pattern above the recent, let's call this an ascending channel, kind of an ascending channel inside of this is a sideways moving process. This is a consolidation process. Usually we face this as a bearish flag pattern, where the market trades lower and then starts to form a consolidation process, a flag pattern, Usually we call this a bearish flag pattern. For that to happen, for that pattern to trigger, of course, we need to see a violation of the bottom or the structure support of the pattern. So I started to project patterns above because of this bullish, this double bottom that I shared before with you here in the channel, but also because we have the bullish 2618 printed at the golden Fibonacci level. I called your attention to this pattern before the formation of that pattern. Actually, once the price started to fall, I called your attention to 157.79, which is the 61.8% Fibonacci level, and that sequence completes the bullish 2618 setup, which implies or suggests a bounce from the golden Fibonacci. And usually I project a symmetrical ABCD pattern above. So there's a few points above to complete that sequence, that symmetrical projection. And if that happens, I will pay attention, of course, to this price zone. But as we can see, and very similar to the other Japanese pairs that I showed you before, we still threatening the previous highs. In this case, for the pound, we still threatening the major resistance, the weekly fractal at 161.81. And I admit that actually, let me just check. I need to update some of these fractals because they are not updated yet. Weekly fractal remains the same. The daily fractal resistance is now at the highs. Previous structure fractal at 162.18. Of course, there is obviously a fractal support right there at 160.94. The daily fractal support moved to the next fractal right here at 157.53, and I believe the weekly remains the same. 155.35 previous lows. Okay, it's all correct now. So that being said, we still threatening the weekly fractal, the previous fractal resistance. It's showing some resilience to trade, to break the fractal, and at this point I will not ignore. This is kind of a cup and handle pattern formation. I will not ignore this possibility. So that a retracement and then a violation of the highs may trigger more upside momentum, but at this point I will not be surprised to see a violation or a breakout of this piece of structure right here, and basically the violation of the support again. So if the price breaks again the fractal support 160.94, we may see the price searching for this 200 moving average, eventually searching for that moving average. This may act in the future as a cup and handle pattern formation after a strong move to the upside. Then the price comes to retest the previous highs and starts to pull back, forming the handle. Eventually it may trigger more momentum to the upside after a breakout of these highs. If that happens, I will pay attention to the potential or the eventual crab pattern projected at 164.97. Of course, we are far from that level. At this point, I will pay attention to the eventual breakout of the support, which will force the violation of this recent structure printed right there. Eventually, this is not completed yet. We may see the price trading a few points higher from these levels, eventually trying to form kind of a triangle, you know, and probably you will need to adjust this structure once it starts to form or starts to unfold. So of course this is pure speculation. I don't know what will happen, but I admit the price may find some resilience to break below the support, at least for now, and for that reason I'm not paying special attention at this point for this one. I prefer to wait for higher prices for the pound, but I don't ignore the violation of the support. If that happens, I believe it may trigger more downside for the pound. The Aussie, it's also trading the golden Fibonacci extension. Actually, it was it printed a very nice reaction, an initial reaction after forming the sequence. Not enough. This is not enough for the pattern. Usually we target the 50% Fibonacci of the last swing high, and as you can see, it's far away from that level. Actually, we can measure that, probably not even the 38% Fibonacci level, or eventually only the 38% Fibonacci. Not even the 38% Fibonacci. So not enough for the bearish shark pattern that usually trades the 50% Fib. And then we have a new higher highs back to the previous structure support. So at some point I started to see this as a potential heads and shoulders pattern. We have the head, and probably that, let's see, it is still possible to unfold into the heads and shoulders. For that pattern to trigger, we need to see a violation of the lows. And by the way, another one that I need to update the fractals. Wait just a second, please. Aussie versus the yen. Of course, the daily fractal, not the weekly, the daily fractal to the recent highs. We have already a new fractal resistance right there, and the support to this fractal. Daily move it to previous lows, and the weekly remains the same. What is this? What is this? I'm not sure what is this. I want to delete this line from here. 88.65. Well, I don't need this here. Okay, let me delete this stuff from the bottom. Let me just keep the 38% Fibonacci retracement there, acting as a support for the pair. As I was saying, a violation of this trend line or this structure support, probably the violation that may imply the violation of the fractal support. That may trigger, that's still possible to trigger that edge and shoulders pattern formation. So we have the left shoulder, the head, and we are probably or eventually forming the right shoulder. If you go into a lower time frame, you can see between these highs we may face a false breakout above. That false breakout above will only be confirmed with a violation of the support. As you can see, this fractal support is also important to confirm this potential lower time frame. You can go into a 30 minutes time frame chart if you wish. As you can see, we have new higher highs, a new fractal resistance, in fact, at 92.73, and of course you need to confirm that with a violation of the support. So pay attention to this price zone, to 91.99. The violation of the fractal may trigger a deeper pullback for the pair. Let's measure the potential reward for the edge and shoulders pattern formation. So I will measure, let me simplify this process. I will measure an extension between the head and the support for the pattern and project the 200% Fibonacci a move below the support. So for that, I usually use a Fibonacci extension level. I pick the higher close of the head and the lower close of the left shoulder, and I push again to the highs, to the higher close, and I search for the 200% Fibonacci extension level. Let me repeat that process again. Higher close, it's right there at 93.02. So I pick my Fibonacci extension. I pick the bottom of the previous support, the lower close, not the lower low. Eventually we may see the weak of a candle printing new lower lows, but I'd always search for an extension between the close prices of the pattern, as I said multiple times here, and I search for that 200% Fibonacci extension level. So that Fibonacci extension points to 9065, 9063, 9064, which means we have a potential move below the support equivalent to 134 points for the Aussie. If that happens, we need to see the price breaking the support, rejecting the support, as I said again multiple times, and then we want to see the price starting to trade lower. That means you need to see the price breaking the support, retesting the support, turn that support into resistance, and then you should start to see the price trading lower. As soon the price breaks the next support level, you can trigger your move to the downside, but you need to wait for this process, unless you are an aggressive trader, and sometimes I become kind of aggressive and I short the market as soon as I see the violation of the support. But the books tells you and teach you this process. Wait for the violation of the support, wait for the price to reject that price level again, that offers you confirmation, and as soon the price breaks the next support printed below the next zone, you want to try to take that move. Okay, let's wait for that process to unfold, if that will happen. We never know what will happen. There's also patterns projected. I can project patterns above, especially taking into consideration a golden Fibonacci extension of the last swing low. If the price breaks above the resistance, that's the level that I will search for. Of course, for that to happen, I need to wait also for I need to wait for the breakout of the fractal resistance. Of course, don't try to just because I project patterns above, that doesn't mean the price will go there. Okay, the price may find some support at this 200 moving average, and it may trigger more momentum to the upside, but I'm not sure if that is the case. That being said, there's also patterns projected above, specifically the bearish crab pattern at the golden Fibonacci level. So if the market breaks above, we will be here, of course, tracking that possibility. The same way we will be here for sure if the market breaks below this fractal support. In fact, you can also add, you can put your fractal right there, and you can create an alert, and as soon the price breaks this support, you will get a notification breaking support neck, and you already know the price is threatening the support level of that edge and shoulder, or that potential edge and shoulders pattern formation. That being said, let's move forward. Let's not keep more time or stay more time here. I believe it's a simple process to understand, nothing complicated. Wait for the confirmation, wait for the breakout, or wait for the formation of the patterns, and then think on a reaction. Don't try to anticipate a move, because usually when we try to anticipate, the market will teach you a lesson. So let's move forward. New Zealand versus the Japanese yen, and this also shows some nice price behavior. Specifically the double bottom and the bullish 2618 that I shared before with you. The pattern completed at 82.51, nice bounce after finding support at the golden Fib, another pattern that I projected before touching those Fibonacci levels. So you already know what to expect after the bullish 2618 setup, double bottom followed by the retracement to the 61.8% Fibonacci level, a nice impulsive momentum to the upside, and now we are trading inside what we may call, I was trying to identify kind of a flag pattern or a triangle right there. At this point, we may see kind of a higher lows and kind of a double top right there. So we have no higher highs. Actually, we have a new higher high. So we have kind of a pattern, a flag pattern, and eventually the pattern will break in the direction of the previous swing high. And that's what usually we try to project. So eventually a move above the actually, let me measure this potential move also for the upside. We are talking something like a breakout of the resistance and a move towards 95, 85.40, 85.50 perhaps. And eventually, and this is a channel that I draw, but this is, for now, this is what we have, this is not a reinforced channel, so I need to see the price trading at the highs of the channel to consider this as a decent ascending channel. But this is what the New Zealand Japanese yen may offer in the future, may form in the future, and a big ascending channel or a nice ascending channel, and we may see it if the price will be capable to reinforce the highs again during that process. For now, we have a decent range between resistance and support levels, 83.57, 84.46. And I admit, specifically above the weekly fractal, not above these recent ones. We may see the price trying to break this range and finding resistance again at the weekly fractal. So for that reason, I prefer to see a clear violation of the resistance, which implies, again, a clear violation of a support or a resistance always implies a retest of that fractal resistance or that horizontal resistance zone and a rejection of that zone. So if I see that kind of a behavior, and it may happen on a lower scale, on a lower time frame, if I see a clear rejection of this resistance after breaking above it, that may offer more momentum to the upside. And it will happen the same below. If the market breaks below the support, we need to see the price rejecting as a resistance this previous support level. This is kind of a simple basic trading setup. Probably, if you think on the range of this pattern, you just need to wait for the breakout of the pattern. But as I said, pay attention to the eventual violation of the resistance that may also trigger momentum to the upside for the pattern. As you can see, there is also the golden Fibonacci extension right there that completes the sequence that I showed you before for other pairs, that completes the bearish shark pattern at the golden Fibonacci level. So that pattern, again, that pattern suggests a retracement to the 50%, so I will not be surprised to see that happen, because that's what we expect for the pattern. But this flag pattern formation after this impulsive swing to the upside, that may trigger more momentum if the price breaks above the resistance or the structural resistance of this flag pattern. So that being said, pay attention to both the situations, the breakout above or the breakout of the support. I don't suggest any reaction while inside this range. We may spend a lot of time, unless you want to scalp that range. It's also possible to trade that range to the downside and to the upside from the support and from the resistance. But at this point, and because we are actually very close to the midpoint of this range, I don't suggest any type of involvement with this pair, at least for now. Let's finish with the Canadian versus the Japanese yen. I shared multiple charts with you before, specifically this higher time frame bullish shark pattern. That pattern suggests a move to the 50% Fibonacci level. We are not there yet. It's still possible to achieve those levels. 102.57. So this is a default target for that bullish crab pattern printed at the golden Fibonacci level. As you can see, the price only completes January the 3rd after one approach to this Fibonacci level, a nice reaction to the upside, and then the formation of a 3 drives pattern. So I shared this 3 drives pattern. That pattern after the formation suggests a move towards the previous highs and the first highs of the pattern, the previous highs of the first highs of the pattern. Target achieved, and if you go into a lower time frame, we are also facing let's say the highs of this eventual ascending channel. So as we can see, we have multiple approaches to these highs recently, and we may be facing exactly another 3 drives pattern formation, and this one targets the previous lows and the first lows of the pattern. We can call it a wedge pattern. In this case, I call it a 3 drives pattern formation. We have the first high, the second high, and the third high. So that pattern targets the bottom of the pattern, which means we may see a retest of the previous daily fractal resistance for the Canadian versus the Japanese yen. So as you can see, there are a few pairs, let's say, which may suggest a move to the downside or a pullback or a retracement. I'm not suggesting a big move for the yen in this time inverted, because if the pairs, if the CAD and the dollar and the New Zealand starts to fall, of course that creates value for the Japanese yen, of course. But I admit the strength, let's say, the strength of the yen strength, and I admit the pullback to some of these pairs. So let's see if that will happen. Euro versus yen, just to recap. Euro versus yen now threatening a resistance, a megaphone pattern formation. We have a shark pattern at 143.96. The dollar versus yen, we are also trading inside that range between the 161 to 24. At any point, the market may also start to print a retracement. 134.50, it's the bearish shark pattern. The pound not offering, let's say, let's pay attention to this fractal support. Nothing specifically. We're still threatening the previous highs and weekly fractal resistance, showing some resilience to trade higher. Aussie versus the yen, as I said, it may unfold into this head and shoulders pattern formation. Wait for the violation of the support. The New Zealand versus the yen, also inside this flag pattern, which may suggest a move to the upside after breaking above, but at the same point we have that bearish shark pattern uncompleted, which targets the 50% fib at 83.37. Pay attention also to that move. And to finish, the Canadian dollar versus the Japanese yen, which is threatening the recovery of the channel resistance. Again, no attention to these moves right there, but also printing a 3 drives pattern formation, well supported by the divergence between the highs. That pattern suggests a retest of the previous daily fractal resistance position at 98.86. And that's what I have for you for today. Let's see how the market unfolds, and we will be here tomorrow to update and to get a clear vision of the week. Safe trades, take control of your risk, and that's all for today. See you there.